Right, the Aussie dollar on the daily chart, we've had a very choppy start to the month, haven't we, this week, with all these wicks. So it's not going to be an easy one to pull up a technical analysis, but we've got the W formation. These W formations tend to see the price pulled back in towards the neckline. This isn't quite overextended yet, so we can still see that come all the way back into here. We've got a 61.8 and a 50% mean reversion that could play in that regard. The bullish impulse today is very strong, but a higher volatility on the day, so to be expected. And we've got resistance up over here. So the thesis is that we're looking for a petering out, a deceleration, and then the trickle lower. Pulling out to the weekly chart, again, we've got resistance potential all the way up to there. So this could still move up. I'm not denying that. But if we were to clear this up a bit, you can see that we're in a downtrend on the weekly chart. Drawing that with a broad brush, make that red for resistance. And on the inside of this market, we've obviously broken that level there. And more recently, this prior bullish trend has been broken. So with the break of structure over here, this candle, that impulse, and it's struggling to get much higher than that resistance with that candle, that breaking impulse. So that was a bid, so that now becomes resistance. Mark that up around about 67.80. So again, this plays into the bearish thesis, while below there, from lower, and we're in that channel, if you like. Right, that's on a weekly basis. Now we clean up all of this, we'll move down to a lower chart. So on that basis, if we're looking for shorts, then we want to find out again where our resistances are. Potentially here, potentially here, potentially over here. Right? Well, we're not really too concerned, but it's just worth knowing where the resistance area is. Because at this stage, you're thinking, well, this could run higher, but if you're biased to the downside, where you're going to get more bang for your buck, if you like, you don't want to be chasing the bid, do you? So you're not really too concerned where these resistances are. Because we're looking for the shorts. What we're more concerned about is seeing the deceleration in the bullish trend, which is this. And we're only going to be active once we've had a break in structure, which is currently down here. With our support channel currently, as things stand, on the 4-hour chart, this is swing trading, and you'll be looking for something like, for the price to peter out, let's say, start building a bearish schematic with a break of trend line, retest, break of structure, excellent, and retest, and a subsequent blow off. That's the sort of thing you're looking for. Now, if we were to pull this down onto an hourly chart, then we have same structure. We have potential support here now, over there. Now you've got this W formation on the hourly, so we're expecting a pullback into it. So I'll mark that up. We'll get rid of this. I'll just make that very small and faint. So you've got this really wonky W formation, but nonetheless it is a W formation. So we're looking for something like that to occur, quite as high, into support, and that could be the beginnings of the deceleration and a move in towards the trend line over the course of the next days, sessions, hours. So there's no point in pulling up our Fibonacci yet, but we can, not until we've seen a bearish candle close, but currently that's where the Fibos lie, so we can pull that out into the 38.2, 67.20-ish as a downside target for the foreseeable hours on Friday.